Lumi Trade Lessons: Understanding Reward to Risk Ratio and Batting Average. Today, we're going to learn how investing and trading are a lot like baseball. In baseball, your batting average tells you how often you hit the ball. In trading, it tells you how often you need to be right to make money. We'll also learn about something called the reward to risk ratio. This just means how much money you're willing to risk to try and make more. Let's break it down together in a way that's super easy. Oftentimes, when traders make a trade, they expect a 100% guarantee that their idea is right. But what if I told you, you don't need to be right all the time? What if you could be wrong more often than right and still come out ahead? This is where the reward to risk ratio comes into play. Let's play a game. Imagine you flip a coin. Every time it lands on heads, you win $3. Every time it lands on tails, you lose $1. Would you play this game? Sorry, you lost the first round. But let's try again. Heads, awesome. Our $1 loss just became a $2 gain. Do you want to play again? Heads, again. Okay, we just made another $3. So we have $5 in total. Isn't this game becoming fun? What if you could play this game 10 times? Would you still play it? What if you could play this game 1,000 times or even 10,000 times? This is the law of large numbers. The more you play, the closer your results get to the expected average. In this case, you'd end up with a reward of about $2 per flip. Half the time, you make $3. Half the time, you lose $1. So the XSpec. This is how traders make smart decisions. They don't just ask, am I right? They ask, how much can I win when I'm right? In Trader Talk, what is my reward to risk ratio? Batting average is essentially a trader asking themselves, when I trade, how often am I right? With a fair flip of a coin, the batting average of the coin toss is 50%. 50% probability of heads and 50% probability of tails. So here's the question. With a 3-to-1 reward to risk ratio, if you had 10 trades, how many of those 10 trades need to be wins? Well, if we win 3 trades times $3, that equals $9. If we lose 7 trades times $1, that equals $7. 9 minus 7 equals $2 profit. So guess what? You only need to win 3 out of 10 trades to make money. That's right. A batting average as low as 30% is enough to be a profitable trader if, this is a big if, all your trades have a reward to risk ratio of 3-to-1 or greater. And that's why a 3-to-1 reward to risk ratio is so powerful. You don't have to be right all the time to be profitable. So the higher the reward, the less often you need to be right. Why this is powerful? This is one of the biggest secrets of great traders and investors. They don't try to win all the time. They try to win big when they're right and lose small when they're wrong. Let's look at this chart that shows the relationship between reward to risk ratio and batting average. In this chart, the first column shows a 1-to-1 reward to risk ratio and its break-even batting average. In other words, if you are willing to risk $1 to gain $1, you need to be right more than 50% of the time to profit after many trades. The second column shows a 2-to-1 reward to risk ratio, and its break-even batting average is 33%. This means that if you risk $1 to make $2, you need to be correct only more than 33% of the time. The second column shows a 3-to-1 reward to risk ratio, and its break-even batting average is 25%. This means that if you risk $1 to make $3, you need to be correct only more than 25% of the time. The second column shows a 4-to-1 reward to risk ratio, and its break-even batting average is 20%. This means that if you risk $1 to make $4, you need to be correct only more than 20% of the time. Only 1 out of 5 trades need to be winning trades. You don't need to be correct. You need to be disciplined. You need to always use a stop loss and targets to take the emotion out of trading, and just use the law of large numbers and high reward to risk ratio trades. So put on many trades, risk very little, trivial amounts that do not affect you financially, and only place trades where reward to risk ratio is 2 or higher. With LumaTrade, you can adjust the entry, target, and stop loss values on the graph and see what the resulting reward to risk ratio would be. You can try larger or smaller stop loss values. You can adjust the entry and target zones to be larger and smaller as you please. Today, you learned something even adults struggle to understand. You now know that the reward to risk ratio is how much you could win versus what you're willing to lose. Your batting average tells you how often you need to be right. And best of all, you don't need to win every trade. You just need to make more when you win than you lose.